we know that Trendline actually do um rights issue, but this is a non-tradable right issue, and I actually look at it. I understand what is the basis behind the company, and if you bought it like at 3 cents, it actually double within less than 3 months. Also, the reason why I actually the number three most highest ranking in investing note is because of the fact that usually when I earlier days where I post all the articles or I go to invest fair or I actually share how to do my investment using only on IPOs trading strategy and also on the how to say on how to use the IPO to actually make money by investing in it. Or I also find methods such as looking at the rights and everything correct. How do I actually choose and actually make on it? So I'm also one of the famous corporate action specialists. If you go to the YouTube, you all go and find on it, correct? You all basically can find the how to say you basically can find video from all the corporate action that actually I post. For instance, like SIA itself, when there was a right issue, I actually advise people how do you actually profit from the SIA? What should you do if you have SIA shares? And what should you do to make even more money from the SIA shares? And all these are proven because of the fact that if you have done what I've done, basically you could easily make few hundred to few thousand of hundreds of thousands depending on how much money you have. So some people actually ask me, if I have very little money, only few $100s, can I actually apply for IPO or actually do your rights project? Answer is yes. There are ways to do it. It doesn't mean that you need to have big lump sum of money, then you'll be able to make money from it. So along the years, correct, as my method has proven, I got more and more clients. I use the same method to actually advise my client. I've actually went to the Age magazine and also appear on TV, radio experience, 早报, and then full page on the Age magazine, and also one of the Invest Fair speaker. And also occasionally I go to school during career talks or investment seminars, and I actually share what I actually know with all the people who wants to know about my method. And also using this type of simple methodology, correct, which I don't use mainly on just corporate action strategy, I actually won quite a number of competition. So in 2010, correct, I actually, for this Yahoo Finance Gazillion competition, I used corporate action strategy itself, correct. I was ranked second in place, and they give me a 1 month advertisement on the SBS Transit bus. So I must be doing something right in order for me to be on the bus and also to win competition and also to have such a strong following, and also a lot of people actually want to know how I actually invest and they want to hear my guidance. So let's talk about the first thing that you all need to know. So for local SGX IPO strategy, the first question is, when should you invest for an IPO? And how to increase your allocation? A lot of people don't know. So today, the preview will at least teach you all the basic. And also the second thing is, we will also teach on what are the warning signs that to skip an IPO. And number three, why flipping is possible but not always profitable. There's something that you need to know is that, like recently, today, 12 noon, there was an IPO close. So I will have actually applied, or if let's make it this preview was done earlier, I will ask you all to apply for this Collywood IPO. And basically, if you get the IPO, there's a very high chance that you will be above water and you'll make money. Whether is it you get only 1,000 shares. And I will teach you all the strategies behind it, how to get more, and why you should apply, for example, like Collywood IPO, which is part under the LHN group. And if you apply, will you make money even you get 1,000 shares? Most of the time, even you just get 1,000 shares, you will be able to make money. So you can see that if you go and know how to apply for IPO, basically today at 12 noon, you will definitely apply for this Collywood IPO. And how much, what to apply, basically will be actually taught in the course. But for the preview, I will just tell you the basic understanding on why you should apply for this Collywood IPO. And every cent counts. Some people say, sometimes I got no money. I only have few $100. I go and apply for this Collywood IPO at 60 cents. I cannot get a lot. So what's the point of I applying? But let's make it you get 1,000 and it open maybe at 65 cents. You also make about example 5 cents. You can even cover the brokerage or and you can even sell it. Can? So this IPO strategy, correct? Invest in IPO during favorable market conditions. Why? Example, if you apply any IPO last year, most of the time that you apply, you will sure lose money. And for all the IPO for last year, and why do I not conduct a preview last year, example, correct? Because the market sentiment for SGX IPO is very, very bad. So we try to avoid when market sentiment is very, very bad. Number two, we also need to learn how to increase the allocation, meaning that a lot of people always ask how to actually increase the allocation of the IPO. Is it I apply 1,000 share? Is it apply 10,000 shares? Is it apply for 25,000 shares? Or should I apply for some nice number such as 88,000 shares? What? IPO, there is a certain way to apply for the IPO to get the maximum quantity. So sometimes some people say, I exactly got 450,000 worth of cash. And if the IPO is $1, I apply for 450,000 shares. Usually I will ask them, don't waste the time to apply such number. So later I will share with you all what are the optimum number to actually apply. Now, the next thing is warning signs to skip. A lot of people actually don't like IPO is because they every time see the IPO, they will think, ayo, I go and apply lah. Every IPO I go and apply. If you do that correct, you also lose money. So there are some IPO that I may actually see wrongly. For instance, I actually thought that NTDDC REIT correct will open correct slightly above water, and if you apply, you get it. You may just be able to cover brokerage, or it may actually go underwater. So I wouldn't actually apply for NTDDC REIT, but I did not expect that on the opening day it actually open at 102. So I didn't apply, just to let you all know. So a lot of people actually apply. What's the reason? Is because they saw what Temasek or GIC actually apply and put in 100 million, and they thought that this is going to be a good IPO. But the basis of not applying for this NTDDC REIT is based on a certain formula that I actually found out is you look at the past precedent. Most of the foreign REITs, correct, actually do not do well in SGX market, and they usually fall below water. So for such IPO, correct, even you have a very strong cornerstone investor like our GIC or Temasek, we will still skip because it is proven that even that is not proven, sorry, it is not proven that if the a strong cornerstone investor apply, but past precedent actually shows that a foreign REIT is listed in Singapore and they usually fall below water, we will try to skip it. And also the sentiment for such REITs are not good. For instance, everybody who invested, like example in Manulife, all these basically are losing a lot of money. So basically they will not be so happy to apply again. So we lose a lot of such customer as well. Number four is very important. For me, when I apply for IPO, I usually will tell people that when I do every project, for instance, like Centurion REIT or even recently the Soon Hawk, I basically sell at opening. So I will not even waste time to actually hold. No doubt Centurion REIT is a good REIT and basically it can go even higher. But for me, if I apply for IPO, my stand is I always only apply for what? I only apply to actually flip on opening. So at opening, I expect it to open above water. I sell it and then I close shop and then that is the end of my project. Can you keep the IPO if you find the dividend attractive? Yes, you can, like Centurion REIT. Or if you find any of the good companies like Astra Bond, you want to keep it for dividend, go ahead. But the problem is for the method that I always proven, I always make consistently, I always sell at opening. I do not like to take risks. And for my IPO record so far, all along since I started, correct, my record is 100%. So there is some suspicion ever saying that whether I'm Mr. IPO on the website. Answer is no. But we have the same methodology and only good IPO we apply. Lousy IPO we skip. So for Hollywood, I actually apply. So why is it that Hollywood that we apply? Because number one, it has strong interest. Number two, it has strong cornerstone investors. And also you see a lot of those bloggers actually writing on it. So this is one IPO that I would say that I actually will apply and I expect it to open above water 60 cent. How much higher depends on the demand and supply. So we do not really actually know. But last time during my earlier days, correct, we have such a thing called the gray market price. Just like the Hong Kong IPO, they basically one day before they have this gray price where they can flip. So through this gray price, we can actually know what the price is going to open maybe. So look at the recent IPO offering available. If let's make it I apply all, would I be able to make in reality, I actually apply for the Astra, Infotech, Langchang Creation, all this. If let's make it, I don't get it, I actually also buy at the opening and then I flip immediately. And then but for NTDDC REIT, I didn't. Design format, basically, I couldn't get, but the problem is on opening, I bought it and immediately I sell it. Now, look at this whole batch of IPO. If let's make it you hold, will you be doing that good? Answer is not necessary. Like design format basically fall below IPO price. Infotech after it gap up, after that it went up, and if you didn't sell, it came down. So there are some clients who actually got from OCBC private placement. And I told them you apply for private placement, you sure win one. So you just go and apply, even you pay the 1%. And they got it. At the 95 cent opening, they didn't sell when we all sell. It went to 98. But after that, it came down within the next 1 day or 2 days. I never follow. So my client kind of call me, hey, should I sell it now? I said, I thought I give instruction that IPO basically you should sell immediately on opening. That's my strategy. He said, I never lah. The market looks so blue. I apply for maybe 1 million shares. They give me a lot. So basically, I thought I'm going to make even more. So at the end of the day, correct, when he sell, correct, he sold at 89 cents. Just cover the brokerage, the 1% comp for placement. And then what happened? Make nothing. So to me, correct, that is why I say IPO itself, you need to learn. You cannot apply all the IPO. But I can tell you a sure win formula now. Now, extra bond so far, whenever they list, there is an extra bond, basically you must apply because it's backed by the government. Backed by government basically is safe. And usually with the low yield environment, correct, usually the price of these bonds will open above water. And what is the percentage it open above water? 1 to 2%. But usually it's about 2%. When the market like now the yield keep falling, at least 2% for you. So if you apply it correct, even you get 1,000, 2,000, 3,000, 5,000, you will make money. So I always tell people there is a balloting rate table for actually extra bond. So you always apply less than 10,000, they will give you in full. So that is they're not give you in full, they will definitely give you something. So if you get something correct, whether you apply for the Singapore tranche or the USD tranche, you opening, you sell, you make money. So if you see this extra, basically you should apply. Now, how about the rest of the company, such as Lamcham Creation, Infotech, Design Format, and NTDDC rate? You have to look at the cornerstone investors. You have to look at the number of shares that is going to be allocated to the public and all this. So there are a lot of things that you need to actually see and actually know whether to apply. I can tell you that all these IPO, I actually learned through all these years of experience. I actually have to give credit to one of my clients who actually built his money, correct, his wealth all through IPO. So when there is a good IPO, he will use his many accounts to actually apply. You see, everybody only can only apply one time, one name. So I can tell you that for the people who actually know how to make money from IPO during the olden days, correct, he will make sure that his father, his mother, his children, his wife, his akong, amma, anyone, mother-in-law, father-in-law, he'll put money in each of the account. And then if it's a sure win IPO, such as Astra, he will make sure that he will apply the optimal number. Maybe for this extra, he apply maybe 9,000, or maybe less than 49, maybe less than 50,000, and he will put 49,000 each into each account and then apply. And each account he get maybe like 8,000, 9,000 shares. Then he will make money. Assuming that, let's make it is not a guaranteed IPO, such as Collywood Centurion REIT that is likely to make. He will use this multiple account to actually apply for this IPO. So when they apply for this IPO, correct, there is a chance. That's why we have the balloting ratio. If your balloting ratio basically is only 20%, mean every five account only one get it. If you have balloting ratio of 50% based on probability, means that every two account one will get it. So recently, why is it easier for us to make money on IPO? Is the fact that we did feedback to the SGX saying that IPO every time give the people who apply more the rich more allotment. The people who apply less cannot get. Like they apply 1,000, and then where is the fairness? So now SGX actually tell the IPO to actually give more to the retail investors who apply little. That's why recently you see a lot of IPO, correct? Everybody will at least get something. There is a higher chance. Now, if you apply more, you get less. Not like last time when you apply more, you may get 1 million, you may get 100 over 1,000 shares. Now you only get tens of thousands shares at most. So there is a change in the way IPO allotment is given. So we have a higher chance of making. Now, I give an example. If you apply for extra bond, or basically if you apply for some of the Centurion one, correct, will you be able to get a lot of it? Answer is no. Can? So basically, if you all understand correct, you all actually can put those emoji, all this, and put a thumbs up. You all find that this is interesting. Can? So let's go to the next one. So for this IPO strategy, we basically will not ever do such a mistake. We will not apply to all the IPO, because if you apply to all the IPO, correct, you always result in overall losses. That's why I already show you already. If you all don't know how to apply, if you all apply the wrong one, some of these IPO can fall below water. Number two, if you don't know how to apply IPO and you apply blindly, like in 2024 or 2023, you apply all the IPO that is have, or they give you placement, you go and take it. Basically, most likely you will lose money. Number three, you always need to understand one key point, is that we need to know what is the market sentiment. I believe that all of you now will be thinking, is the market for SGX bull or bearish? Obviously, it's bullish. So if there is bullish, right? So basically, the market itself is going up. So when it's going up, when you apply for IPO, things will be good. Okay? So if let's make it, if the the SGX market is bearish, correct? Obviously, the IPO market will be down, and we try to avoid applying for IPO. Are there good IPO during a bearish market? Yes. But there's a higher chance that if you don't know how to apply, or you don't have the skill set, like now I never teach you all, if you all just apply blindly on the bear market, correct, most of the time is that overall you will tend to lose money. So we will now look at this case study in the 2024 bearish IPO market. So everybody know that 2024 Singapore market was not very bullish. It's considered bearish. A lot of companies actually do not want to actually even list in Singapore. So all my clients, basically, if they want to list, you all have seen me actually promoting on IPO, correct? I was promoting IPO in Malaysia. So my clients, correct, good companies, they have good fundamentals. They did not even want to list in Singapore. Basically, they are Singapore companies. Do you know where they actually list? They actually list in Bursa, Malaysia. So that's why last year, correct, we see a lot of Bursa Malaysia shares. The moment they list, whether you buy those mini mart, or whether you buy any of these energy company, anything, or even you buy the kopi company, all actually open above water and keep going higher. So for Singapore side, nobody even want to list, because the moment they say you list in Singapore, some of them will actually ask their advisors or financial advisors, or even the FI, they only give them 4 times PE. So it's waste of time listing, and there is no interest and demand. So because of that, correct, there are no interest in the Singapore IPO, and that is why Totally, there are very few listing, and also very few how to say allotment. Allotment meaning that if you apply, most likely you get all. The market environment caused heavy losses for investors who enter IPO without the timing. This also a fact. Later, I'll show you the case study. And this case highlight the importance of recognizing whether the market is bull or bear when we do the IPO. So let's have a summary on this part. When you want to apply IPO, we also do it whether the market is in a bull market or it is in a bear market. If it's a bull market, there's a high tendency that if you even you apply wrongly, you don't know how to apply or you never learn how to apply, you will overall make money. If assuming that the good one, you definitely will apply. The lousy one also you apply. Overall net, you will make money. But in a bear market, you don't know which is the good one. The good one you apply, but the bad one you apply more. Basically, you overall tend to actually be underwater. So we look at this. In 2024, if you have done all this IPO, I can tell you you will cry. Basically, when they list, the IPO, the shares basically cannot even stay above water. That is why you look at all these counters, correct? If you have done the IPO, correct, what will happen? I just give you all the example. So when we enter the new IPO during the downturn, result in the heavy losses, correct, as I already mentioned already. So we'll see what is it that happened. Look at this counter. This counter, correct, a lot of people actually ask me because they know I'm the IPO expert. So when I saw this IPO, they asked me, should I apply? I said, you better don't apply. I said, I close two eyes, this IPO. If you apply, opening below water. Then after that, those people don't listen or don't know how to listen. They thought that it's IPO, it's a medical holding, blah, blah, blah. They went to apply. And do you know what actually happened when they apply? You look at the chart. It was originally very high. But what actually happened? It actually came down. And it came down ridiculous, within less than 1 week or 2 weeks. I remember it dropped more than 50%. Can you imagine for IPO, you apply, you put in 10,000, within less than 1 week or 2 weeks, you lose 5,000. That's how bad our Singapore IPO market. And if you hold the shares until now, you look at it, it just keep on dropping. You lose, I don't know, I lose maybe 80 to 90%. So what is the moral of the story? Bad market, don't apply. Don't know about the IPO, really also don't apply. Don't what we call gay kiang or actually act smart and apply when the market is bad or when this IPO you don't even know whether it's good or not. So later I will teach you some of the tricks that when you apply or invest in shares, why is it that I have a lot of followers? You all will try to understand. So for the IPO case study in 2025, correct, I can tell you that these are the IPO that I close two eyes also apply. The Lam Chang Creation IPO, it was a good IPO, and then the timing was correct. The market was turning bull. There was cornerstone investors, so you should apply. And I have clients who actually buy into it. They put in buy 100,000 shares. They 30 over thousand. It went to 50 over cent. They made about 20 over thousand with 30 over thousand. Astral bond is not a IPO that you apply, you become rich, but it is a more or less what we call 包价, meaning that as long as Astral bond you apply small quantity. Don't apply more than 50,000 because if you apply more than 50,000 shares based on past experience, you need to go through ballot. And when you go through ballot, it's 50-50. Although you may get more, but you want to 包价 100% at least get some, you apply maximum until 49,000. Best is you apply maybe less than 10,000. I will say the best number to apply for Astral usually is 9,000 shares. No need to apply a lot. You say I got few 100,000, I got few $1,000,000, I want to apply more. Can. But the more you apply, you subject yourself to a 50-50% chance. Now, the next one that we need to understand is Centurion accommodation REIT. We know Centurion itself, correct, is behind, correct, is one of the last time one of the top remisier in Singapore, and basically they know how to praise out to the right people and know how to get the top funds to actually buy into the counter, and they have a lot of supporters. So basically when people apply, I say 88 cents, you must definitely apply. I can guarantee them that the opening will be above 95 cents. Why? Because of the fact that Centurion is hot, and basically based on the past few IPO is also very hot, and the cornerstone investor is strong. The backers behind it have a lot of supporter as well. So that is one of the key reason I believe Centurion will open up. But I saw at opening, I forgot I saw at what price it is. I think I saw at 96 or 98 cents. I forgot the price, but I saw around there. And after that, my project I closed it. I never come back and trade, although it went even higher. So some people ask me, Centurion accommodation REIT, if I want to keep for you, can or not? I said can. But for me, as I said, when I do for IPO project, I open it, I close shop, I sell, I make the money, I make a few $100 with my the small sum of money. I'm very happy, I'm contented. So that is the reason why we need to know how to invest IPO. Is it a safe method? Yes. Is it able to help you to make significant money? If every IPO you make few $100, by the end of the year also make few thousand at least. Okay? So Lamchang creation, correct, is basically it was a very notable event because a lot of people are very cautious. So they didn't open like suddenly it fly. But as the market progresses, correct, saying that the market has turned bullish, correct, then the price also start to go up. And the cornerstone investors or the funds, I believe, support the share price. And the share price spiral from 30 over cent, become 40 cent, become 50 cent, become 60 cent. So if you know how to apply for IPO, basically, you have made from Lamchang creation. I have a former big remiser who is now my client, basically went to buy Lamchang creation at 30 cents. And he kept until 50 over cents, as I said. He basically, just on 100,000 share, he make 20 over 1,000 share. He also know that Lamchang creation will go up. So basically, people who are experienced will know whether this IPO can keep or not. So in the investing notes, there are some people who are asking me, you always time tell me, oh, all this what we call in Chinese is call it ma hou pao, meaning that the thing happened, then you say, today, as I mentioned already, Collie haven't list. I said that it will open above water. I think it's a good IPO. Okay, so behind, usually you can see that before each IPO, correct, I actually have a paid group inside investing note, correct. I will ask people to actually apply if they know. So I will tell them about this, telling them that lump sum creation, you apply. As I said, you can flip. I will be applying 100,000 shares or more, and then I tell them that this IPO is good. Then I post. If the IPO is no good, like NTDDC REIT, I didn't even post at all. Basically, for me, the IPO to me is skip. Three reasons I tell them: the concentration fee is very high, it's a foreign IPO, and I'm not keen. I don't see the upside as great. I see that basically it can only maybe 1 cent, 2 cent, but there is more downside risk. So I skip on that IPO. Now let's go to the next one. So you can see that from the beginning, you can see that the lump sum creation, correct? You see opening day, if it actually went up, actually even I sell, I also make money. And people who hold, you see, it just keep on going higher and higher. For IPO, usually when they play up to a certain level, correct, the big boys basically will and they will start to take profit. So there is no such thing as for this not the branded name shares, correct. My view is that once you reach a certain, you have to take profit. If you think 50% is good enough, you just take at 45 cents. If you think 50 cents is good enough, you take. But usually, from my experience, is that from the IPO, actually from the high, it dropped 5%. I usually will sell if I'm holding on to this IPO. So today I'm sharing on this. So now the gist a lot of people will be asking is, do I need a lot of money to do IPO? Answer is no. So let's make it that you don't have a lot of money. You only got maybe um $500, $600. So you just basically ask yourself, you just apply maybe like today calling IPO 60 cent. So you just maybe apply maybe 1,000 shares. If you have got more money, you basically apply what? You apply 10,000 share, like 6,000. If you got even more money, you apply for like example, 60,000, 100,000 shares. If you got even more money, then you just apply for 1 million shares. And usually you won't get all. But for me, as I mentioned already, you got little money, you just apply little. You got a lot of money, you apply more. So usually for us, as we accumulate more funds to do more IPO, obviously we make more and more. So like example, for the Centurion, I apply 100,000 shares, 88 cents. By opening, I got few lots. I sell also make about, I think forgot five, six, $700 CD. So if you have less money, you just make tens of dollars or few hundred. But you have more money, when you get the IPO, you will make more. So you look at this case study, as I mentioned, Astra 9 bond 2025. Why is it that this bond itself? Because on past precedent, when we do IPO, one of the things that you will be taught is basically is that the fact that if the past IPO most of the time always win, and they all believe that the Temasek or GIC type of bonds basically will open with a premium. You look at the past precedent, and usually if they open at least with a 1 to 2% premium, obviously that most of the time this extra nine should follow the predecessor. So you should open at least 102, which really happened that you open above water. And if you apply, you get it, you will make money. So is this a risky strategy? Answer is no. At least this is not something that you're going to take risks. Like you buy, you say, "Aya, I don't know whether I will make money or not." Just like you're buying a share. You also have to depend on certain things. But for IPO, usually based on past trend, and if you get it, and it's very difficult to apply, most of the time is the moment you get it, you'll make money. So that is the rationale in it. So that is why we need to learn and need to analyze, and all this is what I'm sharing now. It's not so simple like you basically just guess that whether extra bond can make money. The under fundamental logic is you look at the past precedent of all the extra bond 876543, and then you look at the bond if the retail investor apply, what did you open above water? Did you open above water? Yes. And then what is the percentage did you open above water? So these are the things that you have to know. Can? So you all have any questions, correct? Please feel free to ask questions in the Q&A. I will address any of these that you are not sure. So as I said, Eddie, again, investing notes for those people who are under the paid subscribers, correct? I will actually correct put in all these IPO analysis. Then I'll post, and then I'll tell them that what do I expect, what should I get. Then I will tell them that I will only expect them to open maybe 1 to 2% above water. Then how about I apply? You can see that I will tell them that you can see here. I told them that I only apply either 9,000. Wait, 9,000 or 49,000, and then I tell them don't apply 50,000 or more, because if you get apply 50,000 or more, it is not a sure get any. It's a 50% ballot based on past extra bond. So all these need to be learn from somewhere. So that is the reason why today I'm sharing you all on this IPO, how you all make money. So some people say, I got 100,000, so I apply 100,000 for extra bond because I hope I can get a lot. Basically, you will not get a lot as well. Because it's so hot, it's so popular, the government want to make sure everybody gets some. And this is a Ho-Ching project because they feel that the retail always get burned by bonds. You want to have good bonds where retail don't get burned and they get a decent payout. And that's where the extra actually came out. Now, let's go to the next one. It's very interesting. We need to know on the case study on the Centurion accommodation REIT. This IPO, as I said, was very oversubscribed. Then you need a balloting process. Again, all the popular IPO has to be ballot, and they have to allocate shares fairly. Last time, I just be honest with you, a lot of these IPO are given to people who apply more. But SGX recently want to revive the market. We have given the SGX valuable feedback saying that retail every time apply sure win one like accommodation Centurion accommodation rate they don't get. So people are angry with the IPO, they don't apply. So that is why our market has not been vibrant. And SGX listen, and for the past few IPO, there are higher percentage for retail to get. Long time ago, the percentage for retail to get is usually 5 to 10%. But now we can see 50%, 80%, 70% balloting ratio. So everybody has a higher chance. Just that everybody just get a bit. Get a bit, make tens of dollars, few $100, better than you totally don't make. And usually when why Centurion go up is because a lot of retail got it, and the yield in the market like T-bills are very low, so they add on. So it helps to create the vibrancy in the IPO market as well. So Centurion went up is because number one, the yield pay well. Number two, a lot of retail investor got it. Number three, when they get only that 1, 2, 3, 4, 5, 6, 7 small puny lots, correct? They decided that since the dividend is very good, a lot of people, including my clients, actually add on instead of selling. So even though I have a safe method where I actually flip on the first day, but a lot of people look at the yield. If they feel comfortable, they will actually add on. Same for the NTD-DC REIT, which I didn't see good. But what actually happened for the NTD-DC REIT is a lot of investors, correct, they bought and then it went below water, went down to maybe below 95 cents. They went to average. At the end of the day, they make money because when interest rate come down, REITs usually go up in value. And NTT-DC REIT is backed by our government. So basically, the price also slowly creep up. That is the reason, that is why our Singapore market IPO has become more vibrant because the allocation for the IPO has improved. And that is why today I'm trying to do the sharing for the preview. So before I actually do this preview, there are some of the people who actually sign up actually ask me. They said, I don't have a lot of money. So should I even listen to this preview? I said, you should, because if you apply 1,000 share, 2,000 share, 3,000 share, every share you apply, correct? Let's make it that you get 1,000, 2,000. Most of the time you will be able to make money. Tens of dollars, few $100 is also money. It's good for you all to actually apply and learn. Rather than you're going to the market, you all buy any share, also don't know whether it can go out or not. There is a higher chance that you apply a good IPO or a popular IPO and backed by cornerstone investor, backed by funds, backed by Temasek, backed by GIC, or the sponsor itself is strong, or basically the owner itself, just like Centurion REIT itself, has a lot of backers. Basically, the IPO usually will open above water. Like I said, AD, I actually for every of this IPO, correct, on the investing note, correct, I do post on it. But it's a private group because I do not want a lot. Okay, the reason why is it that I never post to the public and let everybody know is because for me, as I said, AD, for my IPO is almost from day one, I only show in one, then I apply. So I also do not want the whole world to go and follow me and whole world to apply. Last time, original days, correct, where I started on investing, no, I did it. But the end up what happened is I get less IPO because everybody applied, so the percentage of the balloting actually came down. So I decided that after that, I decided that maybe I only teach to the course participant or basically for the paid group in the investing note, then I will release the information because no point let everybody know. So now this is very interesting. Look at the balloting ratio. You can see that 35 is to 50 in terms of ratio is 7 is to 10. 7 is to 10 means that there's a 70% chance of getting. So Centurion accommodation rate, a lot of people asking is that, Ayo, I apply only 3,000 share, I only get 1,000 share. But you must know that every 10%, 7% got it. It's a very high chance compared to last time IPO, correct? If some of y'all inside here, I saw y'all are experienced reminder, y'all should know the olden days where y'all apply IPO is only 5% or 10% chance. Balloting ratio is maybe um 5 is to 50, 10 is to 50. This type of low ratio. So now for this common folk, especially for the young one, correct? If you apply 1,000 share, you get 1,000 share. Can you imagine you buy 88 cents, you sell at 95 cents, you minus away the brokerage, correct? You also make about $50 example. So that is why nowadays you can make money. Use $880, you make $50, also good. And then there's another way that you can do it is that basically when you apply for the IPO, you can transfer your shares into example, like there's such a thing called the cash plus using the CDP free transfer. Then you have 0.06%, no minimum brokerage as well. So you can even make the full $70. So there are what we call loophole that where you all can read and make maximum. So let's make it that you all go and apply maybe like 5,000 share. You all get 1,200 share. Also not too bad. You get what I'm trying to say or not? But just take note that for me, correct, I apply for example 100,000 shares. I got 3,000 shares. So 3,000 shares, correct, also not too bad for myself. Why? Because of the fact that I also make about maybe I make per share $80 times 3, also 200 plus. It's free money. Okay? So for us, correct, another strategy that you all should make is use multiple account to apply, meaning that you should ask your mother, father, your wife, your children, all these all apply. So all these add up together like $200 over, you apply 5 account become 1,000 plus maybe. This is the strategy that is taught by my clients. Okay, so we look at this table again. So now, if you apply 1 million share, you only get, if you apply 1 million share, you only get 5,000 shares. Last time you apply 1 million shares, I can tell you that the allotment is usually few hundred thousand shares, 100 over thousand at least. But now, because SGX is trying to promote where everybody has a chance to actually own more shares, correct? That is why you can see that retail investors who apply less will have a higher chance. You look at the bulk of it, you look at here, less than 50,000 make up most of the allotment. And that is why nowadays, please apply small, don't apply big. And if you get it correct, you have multiple account, you all can combine together and then you all can have a very, very good meal. And I can tell you that this centurion, the whole family, let's make it they apply, a lot of people actually make few $1,000s. Is few $1,000s a lot of money? Yes, it is a lot of money. But for people who are very rich, correct, now it become pointless for them to apply IPO because last time when they apply 1 million, they get 100 over thousand shares and they make 7 cents. Then you times the 100,000 share, they make a lot of money. Now, the bulk of the shares are given to the retail investors. So IPO itself got chance for people to make. And you can see, this one I'm not lying. So you can see from here the contract, correct? At opening, I sold at 98 cents. And then I immediately cash out. So this is one example that I apply 100,000 share, I got 3,000 share, and opening I make money, and this free money. Can? So now the next thing you need to know regarding this IPO is when should you apply for the IPO? So I tell you that usually I want my money to be in my bank until the last minute. So for example, for this today Hollywood, I apply only today before 12 o'clock. Why? Because I apply early. Actually, I can put the money maybe in somewhere that can earn you, whether is it in the money market fund or whether is it now in those banks where they count on a daily basis. So I will try only to apply at the last minute, last second on the last day. And today I apply, the refund will usually correct will be tomorrow. Evening time, it will go back to my bank. So I only use less than 1 day for my fund to actually apply for this IPO. Can understand on that? So I repeat again, IPO, usually for me, I will apply on the last minute, last day. And since today closing is 12 noon, I'll apply slightly before 12 noon. But in case I forget, I apply maybe 9 o'clock, 10 o'clock. Okay? And where's the refund? The refund is on the evening time next day. So if I want to know how many shares I get correct, basically through the refund, I can calculate the numbers already, divided by the IPO price 60 cents. You want to know the official amount that you get, you basically look at the CDP. So I already explained to you the balloting table now is basically is better to apply smaller quantity than to apply bigger quantity because you will then you will know how many shares you should apply. So today the gist of learning from today preview is very simple. If you apply for IPO nowadays, please apply less. What are the numbers you apply? My advice is 1,000, 5,000. 9,000, 10,000, 20,000. We look at the table again now. Wait. I'll apply either 1,000 because 1,000 and 4,009, I still get one. So I apply either 1,000, 5,000. Sometimes I scared it's 9,000 because the extra bond. 10,000, 20,000, 50,000, 100,000, 200,000, 500,000, and 1 million. So look at this. I apply using this start number. So if I got money to apply for 450,000 shares, should I apply? My view is you just apply 200,000 because your money actually can be put to better use and earn the money in the bank for that 1 day also better than to just go and apply something that most likely just use 200,000 share will be able to get it. Can? So today the trick is you should always apply using this balloting table using the 1,000, 5,000, 10,000, 20,000, 50,000, 100,000, 200,000, 500,000, 1 million. Okay? So this is the summary of the IPO that you all need to know. So I explained to you all the balloting table already, and then you need to use the table to decide how many lots to apply to improve your chance. I explained to you the secret behind it. And usually, don't be despair when you see very popular IPO, a lot of high demand, and then you get very little shares. It also means that the share will open higher, just like Centurion, all these. Higher demand means higher prices. If you have a lousy share, basically it cannot even hold, just like Sunhawk. Understanding the betting table helps manage expectation and optimize IPO application strategy. So to let you know that on Soon Hot, correct, on opening day, I forgot I got how many shares, but at opening I sold at 63 cents. Then I closed shop already. And I applied 100,000 shares. I forgot I got 7,000 or what. But I just explained to you that I didn't use a lot of money, and a lot of my friends, all those who asked for my advice, also didn't use a lot of money to apply. As long as they get it, they make money. So now the times has changed compared to last time. There's no social media. So in case you all also don't never want to learn my course, all this, then you want to know whether this IPO is good or not. Basically, you can use the social media, go and Google, you can read a point and have a feel. If there's a lot of write up on this and they are very bullish on it, it means that the demand is strong on this IPO. So positive social media buzz, all this will actually drive up the share price because you will increase demand. However, if let's make it there's negative sentiment on there's warning saying that this IPO is no good, blah 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 blah, then obviously this IPO cannot apply. So we need to actually have real-time update. We need to have discussion. We need to go to social media platform to actually understand. Assuming that you don't have all the resources, you don't understand the IPO, then basically you need to go to the social media to understand which IPO is hot and good. Is this social media good enough to apply? Answer is no. But that's the next best thing you can do. It basically you only know the basic and then you think that this IPO is good, but you want to know a rough idea, you just only have to search the social media to understand. So a summary today for this one just on the IPO itself is that you only invest in the IPO you believe you have strong fundamental and then you have potential to make. And all this correct, you will be able to read up through all these social media. Nowadays, the bloggers are very, very smart. If you do not know how to check correct, you can ask the AI itself basically to actually gather the all the summary for you. So before you invest, also for people who are new to it, correct, always check your social media, all these, go and find on all these bloggers, investing note, and then see the thing. Now, the next one is you need to see the market condition. Like now, the market sentiment is starting to turn a bit weak. So the Colliu IPO when it open, it may not open like at first. Some people say maybe 80 cents or this. You may have to tamp down. You may open maybe like 65 to 68 cents because suddenly the market overall you can see that people are not doing as well. And recent IPO that listed actually came down. And we need to avoid all the bad IPOs, meaning that we need to see that if the financial, all these are rubbish, all these correct, please don't apply. You rather skip it. And you need to practice patience and strategy on how to invest. Can? Wait, let me go to the next one. Okay, so the next topic, correct, will be even more interesting is the dividend strategy. So today, correct, one of my most favorite strategy is using dividend on how to invest. So I want to give you a rough idea on this. Now, I actually always share with a lot of people is that actually in shares, correct, we do not need to think of investing as very complicated. What do I mean by that? A lot of people say I need to understand the fundamental of the company. I need to understand the technical, then I can make money from the stock market. Answer is not necessary. Even a simple dividend strategy, correct, can also work wonder. So I just give you one strategy that I always give a talk on Invest Fair, similar to the dividend strategy, and it also work wonder is such. For me, if let's make it that I actually got use the product and services, I will buy the shares. If I stop using the product and services, I will sell the shares. So these are very bare basic, and later I will share with you all how come this basic thing works. For instance, last time during the COVID period, I used a lot of like Zoom. So I went to buy Zoom share at 80 over dollar or 100 over dollars. It went to 600 over dollars. But I didn't manage to sell at 600 over dollars. But when I start to use less of Zoom, I cancel my account. It was at 300 plus. I made at least 3 times. So there are certain things that we need to understand that, like dividend or your consumer behavior. These methods of actually using it to trade shares actually work. You're going to think about it. You ask yourself, last time I never used WeChat. But the day I use WeChat, I go and buy into Tencent, correct? I start to actually invest into it. So what is the key thing that you need to take note? I actually only invest when I got use the product or services. Like recently, correct, I use a lot of ChatGPT, I buy into Microsoft. I use Gemini, I buy into Alphabet. So like the recently, I always do a lot of um bank deposits or buy things from DBS Bank. I buy into DBS Bank. So this thing it works. So I'm just highlighting that dividend strategy actually is along the same line. So it's not complicated. You no need to think of investing as very complicated. And if you just use this simple methodology from the start, you use it, you will be doing well. And you think back, you will not lose money. So let's look at this. SGX dividend strategy, for me, I specialize in SGX shares. So a lot of people actually ask me, how would I actually find shares to ask my client to buy? Do I actually look deep into the fundamental and everything? Actually, I always tell them, if you want to keep investing simple, correct, you just look at the dividend trend. Meaning that how is the dividend? Is it increasing? Is it decreasing? Is it stable? And then after that, you want to add on to fundamental analysis, then you add on. If you no need to add on, also you can make money. Inside the SGX, the dividend, all this, you can actually find the dividend and then you can analyze the dividend. And then you adapt based on the dividends direction. So you're going to think back about it is that all this, does it actually work? If you all have been using this strategy from the early days when you're young, would you have been doing better than to go and listen to all the tips or listen to your friend tell you, hey, this counter are very good lah, go and buy easier. But in the first place, do you even use the company product, all this? Or do you use the company services, Ezira, all this, that actually go underwater? No. So actually, the dividend itself tells 1,000 words. But a lot of people don't. And if you just keep to dividend strategy, also can make you rich and also you can retire early. So we need to recognize the dividend trend and we need to identify whether dividend payout are consistently increasing or decreasing over time. Number two, we need to use the SGX dividend tool to actually simplify the tracking. So all this, if you let's make it, you want to learn at the course, you will learn. But at least I tell you the gist of it. And always invest in what you believe. So you got so many dividend. How you actually choose is basically you have to buy on the companies that basically you use the product and services. And when you don't use the product and services, what you should do? You should just sell. And then you have to go and monitor the dividend change. So if the dividend change is going up, correct, basically it's good. If the dividend is coming down, it's bad. It's that simple. But people don't use. They have to be complicated. They want to go and learn technical. They want to learn fundamental. They want to listen to their friends. They want to learn all the gurus. But in reality, you should keep your investment in method simple. Just looking at dividend can make money. So I'm going to share with you all the thing. Look at StarHub. So actually all this correct is by chance that I actually found. Because I realized that I have a lot of friends from Rotary, correct? When I joined those clubs, they are very rich. They are multi-millionaire. And when they buy the shares, correct, when they retire early, basically they buy for dividend. And from then onwards, correct, I found a general thing is that they monitor the dividend very closely. And got this group of people, correct, they retire at the age of 50. They actually put all their savings and everything into dividend shares. And one of the shares they buy was StarHub. I was looking at StarHub. I was actually more a fundamental person in my early days. So I said, wow, StarHub net asset 0.01 cent only. Cannot buy lah. $2. Ayo, damn lousy counter. That was the first thing that came into my mind. So I actually laughing at them. I said, you sure get burned one. The net asset. But you know what actually happened? StarHub went from $2 to $4. And during the time that was, I think in the late I think it's 2028 2008 2009 that period. So what actually happened during that time is StarHub keep on doing well. The dividend increased like from 3 cents to 4 cents, 4 cents to 5 cents. Then the share price also go up. So from $2 it went up to $4. Then from there, correct, I told myself that dividend actually do work. Then I applied to other shares also it work. So number one, why do I invest in the startup, or why do we invest in startup? Is I also that time got cable TV. Number two, startup itself, correct, the line is cheaper compared to M1 and Singtel. They were having a price war. And most of the people who want to watch cable TV, correct, or those TV, they find that StarHub has the most content compared to Singtel. After that then came out, also cannot find StarHub. They have a football also very good. They have a lot of things, and they have the unlimited program where you actually sign up. So as the dividend keep increasing, the share price increased. Now, when will you actually start to sell StarHub? So I also realized that I actually, that time earlier on, I really guide my clients is that when the dividends start to decrease. So when StarHub dividends start to increase, the share price also from $4 drop to 3, 3 drop to 2, 2, 2 drop to 1. So dividend tell 1,000 word. Why? As I said already, if the company is doing well, basically you will buy the shares. Am I right to say that or not? But when the dividends start to decrease even a bit, people will stand to start to sell. Means the fundamental has changed. So usually once the dividend decrease, correct? He said maybe it's only 1 year decrease. You also don't take chance. Once the dividend down, means the company itself is not doing as well. You have to cut the shares. You rather chase high when the profit increase and buy it higher than to don't cut the share and let it melt. So assuming you buy hope, because last time you made a lot from StarHub. So when StarHub the first year, the dividends start to decrease. What happened is you decided not to cut. The price keep coming down. Another point is that I actually based on logic. What is the logic that I actually invest in StarHub and I don't invest StarHub is actually I have a line with StarHub. But when TPG gave me 2 free lines and no need to pay for that 1 year, I went to TPG and get a line. Immediately, I also sell StarHub. Because based on logic, StarHub business will decrease because less people will be using StarHub. So when people using less of StarHub, what will happen? The profit will come down. And when the profit will come down, means the dividend will come down. So you can guess the dividend. Another way you can do is you can anticipate in advance. That means if you think that the profit will come down, the dividend will come down, you can sell StarHub in advance. But if you look at the dividend when it really come down, you sell, it's also okay. But it is a bit later, but it's still okay because the price will continue to spiral down. So in short, just look at StarHub. If number one, why do we invest in StarHub? Because StarHub is a company that I got use the product and services. When I use the product and services, I buy the share. The dividend increase. When I don't use the product and services, or I use less of the product and services, like I go to TBG, I sell the shares, the share price come down. Also, I monitor the dividend. The dividend also start to decrease. We coincide with that, the price also come down. So does it work for dividend strategy for StarHub? Answer is yes. Now you look at StarHub, over the year, remember I told you it keep going higher, then it came down, then it keep going higher when people use. But when people use less, when TPG, all this all came down, you see, or people start to watch Netflix and everything, the share price just keep coming down. And it can never recover. Does it mean that the share price last time was 4 plus? You will ever reach 4 plus again? Answer is no such thing. Once the share itself, the fundamental change, may not go up again. Maybe you hold 10 years, 20 years, you say one fine day start can go up. I do not think so. But as of now, as the dividend has started to decrease, the share price cannot go up. That is the main reason. Can? So that is why I said dividend itself actually tells 1,000 word. And the dividend will correspond with the chart. So dividend, is it a very safe method? Yes. Because number one, if you buy on dividend, at least if anything goes wrong, correct, you got dividend to collect. So let me give you another example that why I like this dividend strategy. So in 1996, I have a client who owns 60 plus million of property because he's a firm believer in property. Then he bought all the property at the highest price. And do you know that he nearly died because the property keep spiraling down, never go up really? Because he bought at the highest. Then you see what ASEAN financial crisis. Then he every time have to tong. But the problem is during the bad times, correct? He basically got rent to collect. So he tong until to 2007, correct? Then it reached back to the peak. So what is the moral of the story of telling you this is basically when you invest in the share, assuming you invest wrongly, at least you got dividend to fall back. That is why dividend strategy, I feel, is a very safe method because you don't just look at technical. Because sometimes technical stocks, when you see is on the uptrend, but if it turns ori, right, or the company turns sour, you don't give dividend, what are you going to do? So sometimes I like to use the dividend strategy. If it's increasing dividend, I buy the shares, correct? I will tend to make money. And if it's making the dividend start to drop, I sell the shares and then I also stop loss. But if it totally don't give dividend, I totally don't have the shares. So it actually coincides with my methodology. Now, this dividend strategy don't work for one thing. It doesn't work for one-off dividend. What do I mean by one-off dividend? Like special dividend, suddenly got one company, suddenly say I want to pay off every day, I want to give off one-off dividend, I sell my asset. Then suddenly the dividend spike up by a lot. That one not counted because that is not a consistent dividend. We are looking at consistent dividend based on normal company operations. Can let's go to the next one. DBS Bank is the favorite darling of most people. Why? Because everybody make a lot of money from DBS. Again, it's so simple. DBS Bank dividend has been increasing over the years. So if you have in DBS Bank, you just hold the dividend increase, you boom. Also, wherever the dividend start to maintain or don't increase, correct, you see the price may fall over the years. It does happen. But as long as the dividend keep on increasing, correct, the price keep increasing. Because of the fact that, again, I study the logic is they expect that the dividend may still continue increase every year or consistent with their growth and everything. So when the company start not to increase the dividend, that's where you have to be careful. Do you need to sell the shares? Maybe, but you may not need to. But when the dividend start to come down, means fundamental has changed. Something has caused them not able to maintain their profit and everything. That is where DBS will come down. So again, I explain to a lot of people, do you need to learn very complex way of investing? No. Do you need complex method to actually spot DBS? No. Just by looking at the dividend itself, you'll be able to make money. And that is why along these years, correct, why a lot of people actually follow me or actually even the remisiers or actually I mentor them. It is because of the fact that I teach them very simple. Do not always try to churn the clients or what. You just need to use good methodology such as dividend itself and ask the clients to invest and use the dividend and monitor the dividend. You will be able to find good counters that your clients will be able to make money. Don't take risks to go and buy things that you don't know or unsure. So if you have a counter that is increasing dividend and but the counter itself you don't use the product and services, can you buy? By right can. But for me, correct, I usually don't. The reason is I have too many counters that I got use the product and services with good dividend and the dividend may still be increasing. Why would I want to invest in counters that I do not understand? Understand? So I'm trying to actually narrow and give you all the summary. If you have any questions, correct, feel free to ask me while I actually go through all these slides. But at least today, I'm explaining to you all this. You all realize that, yeah, why didn't I do it? Why didn't I actually use such simple methodology? And it is not hard, but people don't know how to use. You look at DBS. Over the years, correct, you see when it doesn't move, it means that the dividend is around there. But when the dividend start to shoot up, it also means that the company has been doing well. So when should you sell DBS? For me, it's very straightforward. Once the dividend start to fall, basically it's the time to actually cash out and take profit. As of now, is the dividend increasing? Yes. And usually, as I said, the dividend tell 1,000 words. It means the company is doing well. And how come the company is doing well? Because you can see that recently a lot of branches all closed down. They already cut costs and they increase their profit. And also the market, Singapore stock market, all this is doing well, investment doing well. A lot of hot money actually come to Singapore. There's a lot of corporate deals and everything. So DBS itself is doing well. And when we invest, we always invest in the strongest counter. So there are three banks. The strongest bank is always DBS. The weakest bank to me is always UOB because they invest in the region, they expand. So they invested in Vietnam, they invested in Indonesia because they diversify in Southeast Asia. But it is a wrong move. So it didn't do as well as DBS. And DBS has Temasek backing. So if there's any corporate action like rights, all these correct, we will tend to invest in which one? They will tend to actually give all the deals to DBS. So DBS also went to the right market, went to India. They have an Indian CEO. So that is why it's doing well. Those that actually went to focus on China and Hong Kong didn't do too well. That's why OCBC is stagnant. But OCBC is considered the world's strongest bank ever. So basically, it's more prudent. So you want to buy something that is more strong, safe, you buy OCBC. You want to buy something that has growth, basically you look for DBS. You're looking for the laggard, you want to bet that this counter not doing well, UOB, but basically you will have to catch up, then you buy UOB. But basically, my darling is still DBS Bank. So what do we look out for dividend? Look at all these, correct? Okay, so this is something that I'd like to share. DBS, we have SIA, MM2, SPH, M1, Sheng Siong, Singtel, Cot Life, all these, correct, and Marisha. So what are the counters that I would like to invest? I have actually got DBS bank account. Am I still using it? Is my money still going in DBS? And basically, do I have a lot of product and services that I engage DBS? Yes. So I will own DBS. So my main bank is DBS. Number two, SIA. Why do I buy for SIA? Does it have increasing dividend? Yes. After COVID, the dividend also start to increase. The share price also start to increase. But then we have to be very careful. The dividend may not increase because recently they also own Air India. Air India got crashed and then everything. But during the COVID, when the dividends start to come out, the price keep going higher. You get what I'm trying to say? So I also, after COVID, travel more often and always fly SIA. So SIA will go up. Now, MM2. Why do I actually don't buy MM2? Because MM2 don't itself last time is a good counter. And last time MM2 itself correct. You got give concert ticket. They got give dividend, I believe. Got give concert ticket, give everything. But you ask yourself this simple question. Do you all even go and watch cinema nowadays? You all don't even watch cinema, so how to buy MM2? It doesn't give dividend. You don't even watch cinema. So MM2 cannot buy. So some people say, oh, recently MM2 from the low, it drop all the way to 0.002, it double. If I know how to choose this style of counter that from the bottom can double, I call Sun or God. I don't know. But based on normal fundamental, MM2 cannot buy. Because number one, I don't go to cinema and watch show. I watch Netflix. Number two is how it doesn't give dividend. SPH is my number one darling. From young, when I'm a kid, my dream is always to own SPH because I always believe that people will need to read newspaper, people need to advertise, and then I see all the every time I go to the classified, I see the travel advertisement, I see the housing advertisement, then I see a lot of things, the newspaper very thick, and then I said, ah yeah, every day they encourage the youngsters to read the newspaper to improve their English. So I always thought SPH would be a very safe counter. I never expect technology will change, got internet, everybody read from the internet. So on the day itself, all along, correct, when I started, I always save on SPH. SPH do well, they give 5% stable dividend. And then it is a very, very good counter. But then it went to 4 plus and then start to drop to 3 plus. And I also sold at 3 plus, about 360 something. The reason is very simple. From there onwards, correct, I don't subscribe to newspaper because I have no time to read. All the things I read is from the internet. Why do I need to pay newspaper? And then I also realized that the newspaper, the getting less and less. That means the advertisement get less and less. People advertise the property, will go to property guru, all this. So SPH cannot buy. And true enough, the dividend also start to drop. When the dividend increase, you see over the years, SPH all the way can go up to 5 plus. When the dividend start to drop, you see from 4 plus, it will drop all the way to 1 plus. So listen, this is a very good logic. Just now I was sharing on StarHub M1 also the same thing. So M1 also came down because I actually at one stage, I just be honest with you, I got 7 lines with M1. But I cut. They don't even value me as a customer. So the share price also dropped until $1 plus. That's why I tell you that dividend and also the dividend also start to decrease. So very, very simple. If the company do well, basically you have to see that just because you give dividend, you buy the counter is not necessarily the case. You have to ask yourself, dividend usually mixed with your consumer behavior. If you use more of the product and services and they got give dividend and dividend increasing, confirm must buy. But if you buy a company and you use less of the product or your subscription get cheaper and cheaper, you have to sell the counter. Same for Sheng Siong. Why is it keep going up? Because dividend is increasing, profit is increasing. And then everybody like Sheng Siong. They buy more Sheng Siong and Sheng Siong got more outlets. And at most of the car park that is free car park also got Sheng Siong. So if you got use Sheng Siong, you got buy Sheng Siong, you got even go to a Sheng Siong show, which I just went to Sheng Siong show. Basically, you should buy Sheng Siong. Sheng Siong keep going up. Same for Singtel. Among the telco, I have the most line in Singtel. So Singtel also quite stable. And then the dividend also not too bad. Cot Life is by a darling. Everybody, when you go to the hospital, you give your wife give birth, they will ask the Cot Life whether to. So everybody very scared for the children will actually sign up the package for the Cot Bank. But when they come out with issue, the court, they never protect. The first thing you need to do is to sell it, because you know the company, everybody will reject. They will not be able to do well, may not even give dividend. So another question, a lot of people say that like Mary Chia, I don't use Mary Chia, so I don't even buy it. So I don't even consider it. Okay, so that's why Mary Chia also didn't do well. Okay. So now the last part, correct, is basically on the rights trading strategy. So rights trading strategy, before I touch on the right trading strategy, again, you have any question on the two strategy earlier, IPO strategy or the dividend strategy, feel free to ask me. Now, is this right trading strategy that is very interesting, because this is my strongest strategy where I make the most money. I always spend all my years of as a broker, correct, trying to find a winning strategy, and rights itself, I love it the most. So the underlying principle of rights, correct, is no investors plan to lose money when investing. Okay, so can you imagine there's a right issue? People pump in a lot of money to subscribe to the rights, especially there's a major shareholder. When they subscribe, I always use this under where I study economics under the game theory. You put yourself in other people's shoe. Why would people pump in so much money to lose money? Not possible. Unless these people are dodgy, that means they own a very small percentage, they pump in the money, then they churn out the company money. There are right issue like this. But for quite a number of cases, most of the right itself, basically the share price will go up, and also the company, they try to make it do well. So if the company is fundamentally strong after a right issue, I will usually tend to buy it. So usually during the rights itself, everybody, the moment they hear rights, you can tell you that the counter can say bye bye. We call it the market, you call it cui. Why is this so? You can think about it. SIA issue rights. The moment they announce rights, what happened? From $5 plus, it dropped until $3 plus, 350 or something like that during the rights trading. SATS, when they issue rights from $4, it dropped until $2 and 30 over cent, 37 cents. I still can remember. So this is an opportunity to buy. So if let's make it the company is a good company, when they issue rights, it actually give you a chance to make money. But you have to know whether this company is good or not. And why is it that the rights itself correct? Whether you can buy or not, you need to understand one basic fundamental. And that is, why is it during a right issue, correct, the share price will fall? The reason is number one, a lot of people, the moment they see the form, they ask you, hey, come out to get money. People say, wow, the price dropped already and you still ask me for more money. So usually people will tend to sell the rights. And when you sell the rights or you sell the mother shares, basically the rights will fall. And also when there's a right issue, there will be a discount on the rights. So there are a lot of people who like me. Basically, I know my clients have it. Like example, last time got Tiger Airways. There was this right issue. I got a client got 1 million over shares. You know what I did? I basically asked him to sell the 1 million mother and buy the rights to make the difference. So when everybody keep doing the same thing, obviously the price will fall. But after the exercise like SATS, SIA, Tiger, the price actually went up. Because this fall is actually artificial. So when we have to do on the right issue, the timing, the strategy, we have to research on the right issue. We have to understand the company financial health. We need to know what is the reason. And this is why the reason is that I actually teach on all this. It's not so simple. The other two strategy, especially the dividend strategy, is easier for you all to understand. But for the right itself, it's more complex. So if your three strategy you all don't know how to use, just use on the dividend strategy. But it's the right strategy that can make a lot of money. Like example, recently Trendline, I actually told a lot of people that I will buy Trendline at maybe 3 cents. And now what's the price of Trendline? This morning I saw was 6.8 cents. It doubled. And within the right issue to that, it really went up. And then I will need to know the market condition. If the market condition is bull, basically has a higher chance. If the market condition is very bad, like 2023, 2024, then obviously you do any rights, you may not be able to make money, just like on MM2. And also MM2, when you do the right issue, we have to assess whether how to say, the cinema business is doing well or not. Now we have to decide what is the participation level. Then we have to determine how many rights to subscribe, whether to buy more, whether to apply for access. So all these are the strategy. And then we need to monitor and execute the strategy. meaning that after the subscription, we need to track the monitor the share price, then we need to know whether to flip. So this right trading strategy is a more complex strategy that is not easy for the layman to understand. So for me, when I actually teach people on corporate action strategy, I always find that the dividend strategy is layman, easy to understand, and it's not complex. But there are people who wants to learn more complicated things because they want to explore more complicated methods to make more money. Then you try all this method. But just on the strategy, dividend strategy, you do a back test and think back over the years. What are the product and services you got used, the dividend whether got increase or not? You buy the shares, will you make money? Answer is you will make money. So for example, like the recently on the Costco trading, the right issue, actually I make significantly, and also there are a lot of people who actually follow me or what or learn before they actually apply for this Costco. And actually Costco was offered a discount at 0.122. Currently it's around this price. So it is so low. And but why is it that actually I buy is because the parent company subscribe to all the access that nobody wants. So I always believe that the excess will be at the right issue price at 0.122 will be support. So there is this, don't know whether is it unfortunate or fortunate thing. So basically I have this client. So actually I have this Costco. I purposely buy Costco just to participate in this right issue. So what happened is that you can apply for access. So I told the client itself that I'm going to apply 1 million shares. But that doesn't mean that I think I never put the thing disclaimer or what telling that I am applying 1 million. Don't apply 1 million. She go and apply 1 million shares. So 1 million shares is equals to 122,000. So when she applied, then when she got the access, she stung because she got everything. She got 1 million because there are a lot of people who didn't apply for it. She became scared. Then I said, how many shares do you apply? She told me that she applied for 1 million shares. I said, huh? I said, I apply 1 million doesn't mean you apply 1 million. So at opening, when the rice came back, he sold at 125. And it's well supported. She made $3,000 like this. So right issue, assuming that you don't have a lot of money, you apply maybe 10,000 share, you also make about 0.003. So right issue, if you have more money, you apply more. You have less money, you apply less. It doesn't mean that you must do big to make big. Obviously, when you do big, you have higher risk, but you also can make more. So these are the things that you have to take note. Like example, IPO offer the wait. So we need to understand on this basic is that what do you need to know on all these that we have been taught? We need to know that IPO offer opportunity for early investment in growing companies, but we also need to know whether to apply or skip. Dividend strategy provides steady income, but you also need to look at the shares, whether is it a counter that you invest in. That's how I actually streamline the method for dividend strategy. In fact, if a dividend start to decrease, it indicates that the company health is starting to decline or they are making less profit. Number Lastly, for rights trading, correct, we allowed the investors to buy share at a discount price during a right issue, but it requires careful timing and analysis. So we have all these different methods, correct? We need to master in order to make a diversified portfolio and manage your risk effectively. If you have your own methods, such as example, fundamental analysis and technical analysis, if you go and think about what I have taught today, you combine them, wouldn't it make your method of investment even stronger and more accurate? A lot of people actually think that investment is very complicated because I have a lot of technical analysis to learn. There are a lot of fundamental. I need to learn all the ratio, the PE. I need to learn about the discount model, all this. Yes, it's good to learn, but if you combine all these things that you have learned, maybe couple with what I have actually today highlight to you all, wouldn't it make sure that you all actually will do even better for your investment? And one thing I always like to teach, and then why is it that I have so many followers is because of this. I actually put myself in a lot of people's shoes. I always think that money is very hard to make, very easy to lose. And in the event that we all go on the wrong track or start on the wrong track, basically, when we grow old, especially when you're in the 50s, 60s, 70s, it's very hard to actually recover back. That's why I like to share such easy, proven investment fundamental. Assuming that you really totally don't know how to totally invest, there's even a more simpler way that actually I tell people that you can try to invest is you just invest in the S&P 500 or Berkshire, and it has been proven even you buy at the highest, almost every 5 to 10 years you will double. If you buy, example, during crisis like COVID or ASEAN financial crisis or Lehman, usually it may take maybe 5 years to double, but most of the time, correct, it will take 10 years to double because you are buying all the value stocks and all this method, that all the methodology actually I teach is also inside all this basket of good ETF. Okay, so the more important thing is that be informed or empower the investors to seize market opportunity and avoid the common pitfalls. So after today, I've gone through all these, correct, even just on the basic fundamentals. Basically, you all just learn all this simple methodology. I believe you all will do well, and I also sincerely believe from the bottom of my heart that most of you all won't lose if you all just follow such simple methodology. But if you all want more complex and more complicated methodology, you can definitely add on technical and fundamental. But for me, my basis is basically more on this corporate action strategy, and it works well for me. So summary is you have to try new investment methods to actually enhance your decision making and potentially increase your return. So we need to know that this strategy have been effective for myself, but whether it work for yourself, correct? You have to try and error because just like every time I do a unique sharing is it's just like those martial art, the wukong, the same manual that people practice can actually come up with different outcome is because different methodology, investment methodology can come up with different method because their understanding is different. Just like myself, I found this winning methodology. I do not deviate. And that is why I spent all my time recently trying to impart such simple methodology and proven so that people can start well and do well. So if you find that IPO, dividend, and right issue strategy is something that you want to learn, then you may want to learn further. But today, on the preview itself, I believe that what I taught you all, basically, it actually helps a lot of you all to actually improve your investment methods. So now, yeah, I will spend the next 15 minutes to actually see you all have any questions or anything, and then you all can ask. Then I will explain one by one and tell you all how I feel or what any sharing that you all want to know. So I will stop share first.